Hi friends, welcome to my channel. Friends, today in this video, we are going to learn something very interesting. If you are a trader, especially an intraday trader, and if you are someone who is trading in Nifty future, this video will be helpful. And also, I'm going to share you some of the very interesting secrets about a price action, right? So the strategy name is called opening gap reversal strategy. So I'm going to teach you in detail what is a gap and how we can utilize whenever we see a gap opportunity in index, right? Friends, before going in detail, I want to give you a disclaimer. This video is purely for an educational purpose, and I don't guarantee you any success or profit from this strategy. This strategy, whatever I am going to teach, is based on my experience. So, for me, I have got a better result, almost close to 60 and 65% kind of results I have received in this strategy. That is why I am going to show you. So here in this video, I'm going to take you very detailed what is a gap and how does this gap work and how to utilize whenever we see a gap. So in this video, I will be showing you the same strategy which I applied in Nifty future. Maybe you can apply in crude oil. I have done it for crude oil also, but I have not done a back testing with Bank Nifty or Fin Nifty or Mid Cap Nifty or any other stocks. That's you need to do it. Once you learn this, you can try to apply with your favorite instrument and try to do that, right? So let me show you what exactly a gap and how does it work. So first, let me share my screen. Friends, what is a gap? Gap is nothing but if the price, the opening of price of a particular instrument, if it opening above the previous day's high or below the previous day's low, which is called a gap. That means if let us say I'm taking a chart here, it is chart of 25th July. If you see the low was at 24,199, this is Nifty future, and the high was around 24,420 right? And today the market, if you see today, it's opened at 24,473 right? That means it's opened with the upside gap. This is what the gap means. So gap means the price didn't touch the previous day's high or low, right? It is opening beyond the high or low. That's what the gap. So whenever you see this kind of gap, one thing we need to understand is market will try to fill the gap. Either it's on the same day or it can be on the other day, right? Now, when I say gap, always understand that it is the price should open either above the previous day's high or below the previous day's low. Sometimes people mistakenly think that, see, for example, on 23rd July, if you see the price closed at around 24,452 level, right? And the price the next day, which is on 24th July, the price opened at 24,416, right? So most of the people think that it is an downside gap opening. But in fact, it is not a downside gap opening because the price opened within the range of previous day's high to previous day's low, right? So this is not a gap. Hope you understood. So gap is only if the price opened above the previous day's high or below the previous day's low, right? If it opening in between, that doesn't consider as a gap, right? Most of the people mistakenly think this is a downside gap, which is not a downside gap, right? Now, what we need to understand is, so the moment you identify that opening time, the instrument is making a gap, what we need to see, we need to mark wherever the gap is. For example, today on 24th July, what happened? The market opened with the upside gap, right? The previous day's high was around 24,424. So I'm just going to mark this line, this point. So we had a previous day's, we had around 24,425 level, previous day's high, and there was a gap. So what I mean to say, gap is the market opened at 24,474, right? From there, straight away, the market tried to fill the gap. So now point number one, when you see a gap, understand that the market will try to fill the gap. Either it can be on the same day or it can be another day. Market doesn't like gaps, right? So if you see here today, as soon as the market opened, it tried to fill the gap. It came down all the way here. From there, it went up and created a up, right? So what you need to understand is the moment you understand there is a gap, number one, you need to understand the gap can be filled. Second one, whenever the price try to fill the gap, it can try to take a support or resistance at the gap. For example, if today the price would have been at, if the price would have been open with a downside gap, that means previous day's low was 24,198, and if the price would have opened below this level, that's a downside gap, and there is a probability it can actually come back and fill the gap either today or some other day, right? And whenever the price tries to fill the gap, if it's from the downside gap, it can take a resistance at the gap, or if it on the upside, it can take a support at the previous day's low, right? That's the second thing which we need to understand. If whenever it tries to fill the gap, it can take a support at previous day's high, or it can take a resistance at previous day's low, right? So here, if you see, the price came down all the way and filled the gap and took a support and went up and created a bullish candle, right? So this is a bullish signal for us, right? So the next thing what we need to understand is if the price filled the gap and took a support, it can be a buying opportunity, right? Now, if that's a buying opportunity, what should we do? We should initiate a buy in future, right? And how do we manage the risk to reward ratio? Now, for example, if you would have seen this candle, the first candle, you would have started your buying at the opening of the second candle, which is at 24,495 level, right? So what should we do? We buy and keep a stop loss and target. So either you can keep a stop loss at below the previous days, the supported candle low, right? Or the best way, I will tell you what are the best way I have done it. I normally keep a 30-point downside stop loss and minimum a 60-point upside target, right? Today it went up so high, but we booked at a 60 point. So why I do that kind of stop loss and target, I will tell you, right? So let me open one Excel and show you how does my risk management work, right? Yes, I'm going to show you in an Excel. So let me show you an Excel. Right. So here, for example, friends, here I'm telling I am ready to take a 30 rupees risk. And what I want is I want a reward of 60 rupees. That means I'm going to take a 1:2 risk to reward ratio, right? So this opportunity, this gap opportunity comes very rarely, right? In a month, you get a 3 or maximum by 4 chances. That's it. For example, let us say we are taking a 6 months data. Even 6 months, even if it a minimum 3 trades happens in a month, 6 into 3 is nothing but we have 18 trades in a 6 months time, right? And we all know that trading is a probability game. So nobody can be 100% perfect. There is no holy grail in the market. So it's a probability game. We need to work with the probability. So we try to identify a high probable strategy, high probable setup. With that, we need to work on that. So this gap strategy, I know that this is a high probability setup. With that, I have to manage my risk to reward, right? Now, I'm telling you 50-50 can be my one strike rate, right? That means 50% of the time I will be successful, 50% of the time I will be failure, right? In that case, 18 days into 50% is nothing but 9 days I will be successful. 9 trades will be successful. 9 trades can be failure. That means in 9 trades, when I'm making losses, I will make 270 rupees loss, 270 point losses, and here 540 point losses. That means we have a lot size of 25, right? 25. That means in this 50% of the time I said I will be successful, 50% of the time I will be failure, I can be failure. In that case, 270 rupees is what we are going to do, 30 into 9 and 60 into 9, 540 rupees what we will be receiving. 25 is the lot size. That means within this 18 trades, we may be ending up with 6,750 rupees as a profit. You need to consider your cost and other suppliers, right? This is how it works. So I said I am seeing around we get 60% of the time successful, right? That means 40% of the time I am failure. In that case, we will be making around 10,800 minus the cost of operation, right? So 60% of the time it can be, right? Today was one of the best day to execute this strategy, right? So today morning, as soon as the setup we saw, we initiated the strategy, right? So it's not compulsory that we should get every day the same kind of setup. And I will show you another couple of days which it acted properly. Even yesterday, if you see, let me remove this and let me remove this. So today's setup, what I showed you, that was a successful setup, right? But yesterday, if you see, that was 25th July, and let us mark 24th July low. The low was somewhere here, right? So if you see here, the market opened with a downside gap, right? The opening price of the Nifty was below previous day's low, right? So it was a downside gap. And the price all the way it tried to recover and fill the gap. So the first rule, as I told, market doesn't like a gap. So it tried to fill the gap actually here. And from there, if you see, it took a resistance. So if you see here, this red candle, it took a resistance and came back slightly, right? So after you get this candle, maybe sometime we will take an action, because this is as per the strategy, right? And here at the 22,276, what we would have, or 22,275 level, we would have went short. We got only up to 22,234 rupees, right? So we didn't get exactly the entire strategy, entire points, but in fact it came half of the way. From there it recovered and hit our stop loss, right? So as I mentioned, it will work only 60% of the time, or even if it works with the 50% of the time, still we will make some profit, some return on the capital, right? So today it worked well, yesterday it didn't work well, right? Then I will show you some other days strategies. On 3rd July, we had the similar kind of setup. On 3rd July, let me take 3rd July. I will show you on, this is 9th, and this is 3rd, right? So 3rd July, if you see the price of the opening price was here, right? 24,301. The previous day's high was 24,280 level. So the price opened upside gap, and immediately it filled the gap. It went up, then later it filled the gap, right? It created a red candle. But if you see, later it created a green candle at this almost near to the location. So what it does, it means it is trying to take a support, right? And if you would have bought at opening of next candle or whatever, then we would have got a very good points, right? Up to the maximum high, it went up to 379 level, right? Around 60 point easily we could cover it, right? So this was one on 3rd July setup. So the only thing we need to understand, whenever we see this opportunity, right, the gap, that's a time we need to immediately mark this opportunity and find out whether it's taking a support or resistance. And if it's taking a support or resistance, act on the opportunity, right? And keep 30 rupees stop loss and 60 rupees target. So that even if it is 50%, even I'm telling you, even if we are wrong by 60% of the time, let us go back to the Excel and show you. Even if we are wrong by 60% of the time, and even if we are right only by 40% of the time, still we will be ending up in profit, right? As I mentioned, my experience is almost 60% of the time we can be successful, but still, even if 60% of the time, even if you fail also, you will be in a profit. right? That's a beauty of this strategy. Right? So friends, I'm going to show you one more very interesting point. So I said already that the market doesn't like gaps, right? So in this, I've just taken 27th chart. Okay, 27th, if you see, the market Nifty made a high of around 24,062 level, right? 62, 60, yeah, 60, 60, 62 level, correct. So here, what happened? The next day, market opened with upside gap and it didn't cover the gap. And if you see on next day also, it didn't cover. So it was continuing like that. And if you go and see on budget day, exactly market came and filled the gap and recovered, right? So what I mean to say is, market doesn't like gap. So whenever you see a gap, understand that market will try to fill the gap either the same day or some other day, right? So I'll show you one more. On 14th June, you can see the market made a high of 23,490 level. And the next day, that is 18th June, market opened with an upside gap. And the whole day, it didn't fill the gap. You see, it couldn't fill the gap. But on the following day, which is on 19th June, if you see, that gap got filled. So this is what you need to understand. Wherever gaps are there, always make sure that you mark in your chart. There is a high probability that either on the same day or some other day it can fill the gap, right? But when you take a trades, make sure that you keep proper stop loss, right? You don't know that you should have a proper limit for your risk, correct? Now, friends, one more setup I will show you before winding up the video. Friends, if you see on 6th June, right? So previous day, 5th June, market made a high of, I will show you the levels. It made a high of 22,707 or 708 level. It made a high, right? And it made a high. And what happened? You see, the market opened upside gap. It may open with a 22,007, the 2930 level. It opened, right? And immediately it filled the gap and created a bullish candle. And this is the one opportunity for us to actually buy it, because the first candle itself showed us that so the gap is already filled and it took a support, right? Now, if somebody would have bought at this level, they got a very good opportunity, right? So friends, this is how we have to manage the trades, right? So whenever you see the opportunity, whenever you see the right gap opportunity, make sure that you mark it. And if you find the right opportunity, the right momentum where it's taking a support or resistance, take an action on that. Okay. And the risk to reward ratio, other thing, you don't have to follow whatever I said. You can actually create your own. You can do a backtesting with your own data and see which is convenient for you. Your risk limit may be slightly higher than mine, or your risk limit can be slightly lower than mine. So accordingly, you can set your risk to reward ratio, right? But always make sure minimum 1:2 risk to reward ratio you should have it while doing an intraday trading. Or if you can get a 1:3, it's a wonderful and good thing, right? So that's all in this video, friends. So thank you very much. Friends, before winding up, I want to invite all you to my masterclasses. There are a couple of masterclasses we have scheduled. The link to register for the masterclass is there in the description. So click on the link and register for the masterclass. Also, friends, if you're watching first time my channel, make sure you subscribe the channel. Hit on the like button, comment in the comment box what are the more information you want on trading and automating your trading, about algo trading, so that coming days I can come up with those kind of videos and help, right? Also, make sure you share this video with your other trading friends so that it will be helpful for others, right? So thank you very much. Wishing you all a very happy and successful trading. Thank you.